the Bank of Amsterdam basically failed for a variety of reasons. But one that the three things that they found was basically, one, the central bank ran at negative equity. Two, there was deterioration in the economic, macro environment, as well as an external shock of sorts. So a war, natural disaster, something like that required kind of them to abandon sound monetary policies. And then the third is that there was an alternative that existed for the citizens to escape the fiat currencies from. So in the case of Bank of Amsterdam, that was metal coinage. And so when I looked at all the reasons that the Biz found why the Bank of Amsterdam failed, I look at the current Fed and I'm like, check, check, check. All the things are in place. Now there's differences between the Bank of Amsterdam and the Federal Reserve today, but it's just very interesting to say, okay, there's a lot of similarities too in terms of why the Bank of Amsterdam failed and some of the challenges that face the Federal Reserve and all central banks today.
Yeah, great analysis there. And it is eerily similar how similar the Fed is to the Bank of Amsterdam. You put in this chart with the central bank having negative equity, and you put in a chart of their operating profit and loss. And like you mentioned earlier, after 2020, all the data is just like it barfs, right? So it's basically flat for 10 years, and now the central bank is just running a massive loss. Can you talk about this? Like, how is the Fed losing so much money?
Mining Bitcoin has never been easier. The streamlined onboarding for the Blockware marketplace means you can literally start mining Bitcoin with just a few clicks of your mouse. After signing up, enter your name and billing information, agree to the terms of service, add a wallet to receive Bitcoin mining rewards, and that's it. You can now buy a hosted ASIC and start mining Bitcoin completely hassle-free. To celebrate this upgrade to our platform, we're giving away a free Antminer S19 XP and 1 year of free hosting. To enter for a chance to win, all you have to do is sign up for the Blockware marketplace, complete the 2 onboarding steps, and like and retweet our pinned tweet. If you've already signed up, you can still enter the giveaway by completing the 2 onboarding steps. Get started at marketplace.blockwaresolutions.com.
Yeah, so maybe we could start with just like a little bit about the Bank of Amsterdam, what happened with that. That might help. The Bank of Amsterdam, it started out as a bank that was fully backed by metal coinage. But then over time, it started running fractional reserve banking. And the reason the Biz decided to make this comparison to today's central banks is it started to function a lot like a central bank today, in that it did open market operations like asset programs like QE and QT to try to manage the money supply to basically hit a exchange rate target. So like an inflation target, just like the Fed's 2%. That's how the Bank of Amsterdam worked. Now, when the Bank of Amsterdam came into trouble was they actually started to have a huge borrower. The biggest borrower at the time was the Dutch Indies Company. Let me, what's it called again? Just so I get it right. The Dutch East India Company. Yeah. So that was like the biggest company, right? That's one of the first, like, people say it's like the first public company, huge company in the Netherlands around that time. Now, they became the biggest borrower, but then there was like a pivotal event that happened, which was the Fourth Anglo-Dutch War, where basically that shipping company lost a ton of ships in the war. And suddenly all the loans that the Bank of Amsterdam gave them, they started to become non-performing. Basically, they couldn't pay them back. And so over time, instead of kind of reducing those types of loans, they actually doubled down. They started giving this company even more loans that they couldn't pay back. And so as a percentage of their total assets, it became less and less of gold coinage and more of just bad loans. And so you look at the Federal Reserve's balance sheet today, and it still has a bunch of those terrible, mortgage-backed securities from the global financial crisis sitting on their balance sheet right now. It's just full of these crappy loans. And so similarly, the Federal Reserve today, when they did all their policies throughout 2020, they basically got into a situation where they did massive amounts of QE, right? They added over $4 trillion in a few years, and they bought all those loans at super low interest rates. And then inflation surged, and they had to jack up the interest rates. So ironically, the assets on their own balance sheet kind of got hit by that. But at the same time, it it hurt them on the liability side, because the Federal Reserve, the liabilities on their balance sheet consist of commercial bank deposits in the form of bank reserves, but also the reverse repo facility. And the Fed has to pay out those interests. And so when the Fed raised all the interest rates to 5%, suddenly, the bonds that they held, the assets, they pay out interest really low because they bought them all during 2021 with their QE programs. So they're only paying 0 to 1%, but they have to turn around and pay the reverse repo facility over 5% and these bank reserves over 5%. And so then they start operating at a loss. And so at this point, they've suffered operating loss of over $95 billion since September 2022. And that's the first time in history this has happened for them. They usually make a profit, and that profit just kind of goes off to the Treasury. But now they're operating at a huge loss. And so that over time, each month, eventually, the Fed's net equity actually went negative. That means the liability on its balance sheet exceeds its assets. And if the Fed was like a regular bank, they would be considered completely insolvent right now. And so similar to the Bank of Amsterdam, they were sitting on all these bad loans, and eventually their entire equity went negative. All right. And so it's just another similarity. But here's where it gets interesting, is because the Federal Reserve has these accounting tricks, and they can just say, oh, but we're going to mark these losses as quote unquote deferred assets. Okay. And this is just like an accounting trick, literally an accounting trick. And instead of paying out the profits to the Treasury once the Federal Reserve becomes profitable again, they're just going to be able to pay down their losses whenever that happens. And so they basically get this leeway. So hey, we're not profitable right now. We can't pay the Treasury like normally. And once we do become profitable, we're just going to have all these losses pile up, and we're going to take the time to pay down our own losses, make ourselves solvent again, and then eventually we'll start paying the Treasury again. And so what that means is basically the Federal Reserve gets complete leeway to operate at a loss at the expense of taxpayers, because usually they're a profitable organization, then they pay the Treasury, and that helps the fiscal situation for all U.S. taxpayers. But now the Fed operates at a loss, and then it gets to have time to kind of pay down its losses before it goes over and starts paying it again once it becomes profitable again. And so to me, the Federal Reserve is insolvent, and they have negative net equity, just like the Bank of Amsterdam, if it wasn't for these accounting tricks. And that's kind of where there's little differences between the Bank of Amsterdam, because the Bank of Amsterdam couldn't really do these things like the Fed can today. So it gets nuanced, but it's basically like the Fed's own policies shot themselves in the foot, and now they're getting a bunch of leeway to try to survive until they become profitable again. And just one more thing, what they mean by that is eventually when they have to cut interest rates again, because that's when the interest rates will become, they won't have to pay as much on their liability sides to, the bank reserves or the reverse repo facility. And it'll kind of get into equilibrium a little bit. So the Fed's basically banking on itself eventually having to come in and cut interest rates, which is hilarious. And so that's kind of a summary of that whole thing, but it's fascinating.